Hello friends, in our previous lecture we have completed chapter number 8. Now we are moving towards the next chapter, that is chapter number 9, ledger posting. As I said in the first session itself, that chapters of our accounting are so logical that one by one we are learning new topics and finally we will reach at a good level. As you know, when we have started with the introduction and with the terminology which are used in accounting terms. In second chapter we have learned what is debit, what is credit. In third chapter same rules we have applied and we have learned how to write a journal entry. In next chapter we have learned how to that is about GST, that is an extra topic, and after that we have learned how to match the equation asset is equals to capital plus liabilities. In next chapter we have learned about the various types of subsidiary books in order to divide the types of transactions. After that we have learned one more type of subsidiary books, that was cash book, and next to it, which was our previous chapter, that is journal proper. So now friends, in each of that thing we were writing one column in which column nothing was coming. If I am talking about the journal entry, then if I am talking about the columns, date, particulars, and then LF, then debit, then credit. Now in that, LF means ledger folio number, means the page number in which that entry should be posted to the account. Account is a ledger. Same way in the cash book also LF column is there. Same way in all types of subsidiary books also LF column was there. Which means that first you are making the transaction in respect to journal entry or a subsidiary book or a journal proper or maybe cash book. After that, in order to make posting to that account, suppose we are preparing purchase account, then we are preparing sales account, then we are preparing some debtors account, some creditors account, some expense account. Then again in this now, JF will be used instead of LF. JF means journal folio number. From journal or from subsidiary book or from cash book, we are posting this transaction. Again nothing will come, but I am comparing the things. That ledger folio number means the page number in which we will write this, post this entry, and again journal folio number means from where we have taken the entry. So this chapter is about that thing only. In this chapter there are so much of topics to be covered, but we are covering only some limited topics, as you know that 30% of course has been wiped off. But today we are taking the introduction of this chapter. Okay friends, so on page number 201, introduction. From the earlier chapters, we have learned how to prepare a journal or subsidiary from financial transaction of the business. In this chapter, we will learn how to prepare ledger account from the journal and the subsidiary books, and also how to find the balance in these accounts. As we were finding the balance in cash book, same way we can find the balance in journal also. At the time of preparing accounts in any organization, that is business, to prepare different ledger accounts and to find the balance in each account is very important. Now what is the meaning of the ledger? Accounting is a process of recording financial transaction of the business. The objective of a trader is to get useful information relating to business from the recorded entries. Example, detail of purchase during the year, detail of sales, detail different types of expense, types of amount of income, total assets and receivables, total liabilities and payables, profit earned, loss suffered. These various types of information can be known or obtained from a journal or subsidiary books. In the view of above information, separate accounts are prepared for specific information or summary of accounting entries. The different type of accounts are prepared in a separate book which is known as a ledger book. Here we will prepare each account, because you only think by yourself that if there are 50 journal entries written, and if we want to know the total amount of purchase or the total amount of sale or the total amount of expense, we cannot do. We can only make a total of all the financial transactions, but separately where we can take the total of purchase, or you may be thinking that we can take the total from that subsidiary book. But remember my friends, in subsidiary books, according to the type of goods, we can only record credit purchases. We cannot record cash purchase. So you will tell that take from the cash book. Now we have to take from various sources. Instead of taking from the various sources, what we will do, we will check that purchases is written in subsidiary books, also purchase is written in cash book, also purchase is written in the journal proper. From all that we will take purchase and then we will record a one place, and then we can get the total amount of purchase or a sales or any expense. So the use of ledger is for that only. We will keep a separate account and we will take the information from journal entries, from subsidiary books, from cash books, from journal proper, and we will record it in a one place, that is called a ledger. So you can take these, what is ledger, you can write the different types of accounts prepared in separate book, which is known as ledger book. You can underline that thing for that theory part. Now what is an account? In account in first chapter itself we have learned it is the summary of all the transactions. Okay, now here an account means summary showing debit and credit effects of transactions effected during the specific period, the related to either individual goods, assets, incomes or expense, prepared in a specific format according to the rules of accounting. So you can take the base of this first paragraph for writing what is account. Account means a summary of debit and credit effects of that account for a certain specific period according to the accounting rules. Okay. While preparing any account, debit or credit effects of different transactions related to that accounts are given. Thus, an account is prepared with two sides, that is debit and credit side. We know in account everything has a debit and a credit also. Specimen of an account. Now from the specimen of an account given here, we shall understand the account in detail and how to prepare the account. Which are the columns? It is same like the cash book only. Date, particulars. Now instead of LF we will use JF, because in ledger we cannot write ledger's number, we can write the numbers of the journal entries and all. So date, particulars, JF amount, date, particulars, JF amount. See, these columns are similar to the cash book. In cash book there are various columns, here only one amount column is. According to the double entry system, left hand side of is known as debit side and the right side is known as credit side. As given in above specimen, the columns are drawn and each column is explained as follows. In date we will write date column, in particulars the account which is effected, journal folio number means as I explained we are taking the entry from journal, that then the page number is required and we will write the amount. Now what is the meaning of posting? From journal or subsidiary books, a process of recording as per the rules of accounting either on debits or credit side of affected account is known as posting. Posting means according to the accounting rules, we are taking that information and recording into account either on debit or credit side. That process is known as posting. Suppose cash account debit, capital account credit. Then we have to write debit side of cash account and credit side of capital account. Then that process is known as our posting. It is as per the accounting rules. Utility or advantages of ledger. What are the advantages for keeping the ledger? Purpose of accounting is not only limited to recording of monetary receipts and payments. Based on an account, a trader can get the idea regarding the financial position as well as profit or loss of the business. On basis of summary of accounts, proper decisions regarding business policy can be taken. Necessary and useful information to a trader as well as different summaries can be easily and quickly obtained from the ledger. Thus, fulfillment of main objects of the accounting is possible with the help of ledger only. Therefore, ledger is known as king of books. Underline, ledger is known as king of books. Now, if in exam, if I am asking why ledger is known as king of books, then you have to write a short explanation what is given in this paragraph. From journal, a trader gets information regarding original transaction and basic information of the business. Therefore, journal is known as original book or primary book. Underline, journal is known as original book or primary book. While from the ledger, information regarding financial procedure or for profit and loss, a business can be obtained. From the viewpoint of utility of a ledger, it is known as main book or principal book. Underline. Ledger becomes useful to get the following information: capital ratio for assets, receivable payables, expense incomes, information of purchase sales, to prepare a trial balance which we will learn in next chapters, final accounts for making decisions, and get the statistical information. See, the use of ledger is so much. We can know the profit and loss. We can know the financial position of the business. We can know profit or losses. We can know total amount of purchase, sales, incomes, expense. So in short, if we say all the necessary information which we have recorded, now to make a proper use of it, we are preparing this ledger, and from this ledger so much things we can prepare. Index of the ledger. As we are having index in our textbook, that in this part there are 11 chapters. Then which chapter is located on which page and it is for how much page, it is information is given in that index. In the same way, which account is on which page, the information we can obtain. Suppose we have kept a long book for these ledgers, for keeping the accounts with the person. So which transaction is on the which page number we can. All accounts arising from the business transactions are maintained in a ledger. There are numerous of accounts. At the time of posting process, too much time is wasted to find out which account is on which page. Therefore, for the sake of convenience, in the beginning of ledger itself, all the list of accounts is maintained, which is known as index or exponent of the ledger. Underline the other name of index is exponent. Such a list is prepared alphabetically. Underline, this list is always prepared alphabetically. Hence, each page is serially numbered and therefore against each account its page number is shown, and because of this, account can be found easily. See, a simple specimen is given. Anup's account is on 1 number, Akash 3, State Bank of India 56, telephone expense 61. Okay. Now the forms of ledger. Again, there are so much theory parts also in this chapter, so I am reading each and everything. The form in which a ledger book is maintained depends upon the trader's requirement, capacity to afford the same time of business facilities. Following are the 3 forms of ledger in practice. Underline which are the 3 forms of ledger in practice: bound book ledger, loose leaf ledger, and card ledger. Again, we are taking the information for each in detail. Now, what do we mean by a bound book ledger? Generally, most of the traders, specifically small traders, prefer these types of ledger. This type of ledger is overall less expensive and easy from the viewpoint of preservation. This ledger is a form of bound book. In the beginning of it, index is given and thereafter a page is serially numbered. As and when required, new page can't be added in this type of because it is in bound form. You can know that your parents are purchasing in this time only. On Dhanteras we purchase these things. That on Dhanteras or on Diwali, as per our requirement, we are purchasing that red color books for our business. Then that is also a type of ledger because index is given and we can record our day-to-day transactions on it. But nowadays everything is computerized, so the use of things is for only making the puja, Diwali puja. Otherwise these things are less in practice for big traders, but for small traders again they are using this thing only. They are not using the computer technology. But you have to remember in this thing that a bound ledger is a fixed ledger. You cannot add or remove pages from it. Okay. You can remove by cutting the page, but you cannot practically remove. Okay, loose leaf ledger. Now this type of ledger is in a file form between 2 thick papers or in between 2 metal sheets. The structure here is connected with special type of lock. As it is locked with system, it ensures the facility with safety. Here each page is serially numbered, hence a trader can increase or decrease the number of pages according to the requirements. See, bound book means a fixed book. Loose leaf means it is attached with a magnetic system or with 2 dots attaching that thing, so we can remove and we can add any of the pages as per our requirement. And the next one is a card ledger. This form of ledger is safe form of convenience. Here for each account, instead of paid, a card is used. All these cards are arranged in a steel bar. All the cards are preserved in a specific steel or wooden cabinet. Of course, overall it is an expensive form. Here traders can increase or decrease the number of cards as per the requirements. In this form index, separate cards are required to be arranged. So here card ledger is also like a loose leaf ledger, only we are maintaining it in a proper way, but this is little bit expensive comparing to all because we are not writing on page, we are writing on the cards. We have seen different types prevailing in the form of ledger, but in this computer age, use of these computers is widely increasing for accounting entries and ledger. Even a small trader can afford the computer now, or it is now available in a mobile also. There are so much applications to maintain the records. So nowadays the usefulness of this is gradually decreasing. Process of posting. Here we shall learn the process of posting in affected accounts which are drawn in the ledger for all recorded transactions in journal and subsidiary books. To understand the process of posting easily, we will bifurcate the total process of posting in 2 parts, that is posting of journal entries and posting of subsidiary books. Here we will come across the posting of 2 types of things, that is posting from journal entries or posting from subsidiary books. Posting from journal entries. Journal entries are passed in the books of accounts for financial transactions of the business. From the viewpoint of number of accounts affected, journal entry is classified into two types, that is simple journal entry and combined journal entry. In simple journal entry, on the both side one account is there, and in combined journal entry on both side more than one account can be there. Okay, now process of posting a single entry. See, an example is given. On 15/4/15 received 6,500 for Raj towards receivables. Raj is the giver, cash is coming in, cash debit, Raj is the giver, Raj is credit. So the entry would be cash account debit to Raj account. Now friends, which accounts are needed to prepare in journal entry? You can see one cash is there and one Raj is there. So we will prepare ledgers for cash and ledgers for Raj. That particular JF amount on both the sides. Now how to post this entry? In that you have to see cash is debited. So we will write on the debit side of cash account to Raj. What is given in opposite thing, but the amount will be of only cash. What is the process? Cash is debited. So we have to write on debit side of cash account and the name would be opposite. Opposite name is Raj. So debit side of cash account we are writing Raj, and Raj is credited. So on the credit side of Raj we will write what is given opposite to cash, but we will write by cash because it is credit side. You know in the cash book only to and bys are used. Okay, so this is the process of posting a simple journal entry. Now again there are so much entries. We are seeing an example from page number 206. See in page number 206, first entry is purchase account debit to forum account. Now you can see below purchase account is prepared and forum account is prepared. Now which are the accounts to be prepared? You have to count. See, one account is purchase, then you prepare forum, then cash, then you prepare capital. Then Awadh, then next time cash is not required because that cash will come in that only. So Awadh is required. Sunny, then sales is required, then bank is required, again cash is repeated, it is not required, then furniture is required, Maruti furniture is required, drawings account is required, again cash is not required. Now here I will explain how to post these entries. Okay, the first entry is purchase account debit to forum account. Here purchase is debited, so we have to come to the debit side of purchase account. We have to write the date 1st July, and in particulars we will write what is given opposite. What is given opposite to forum? So we will write in purchase account debit side to forum account, and the amount would be of purchase 45,000. Then we will come on credit side of forums account. We will write on the credit side, and in the particulars we will write what is given opposite purchase. So we will write by purchase, and the amount will be of forum only. Amount will be of forum only, but on particulars we will write the opposite thing. So you can see the credit side of forum account by purchase account. Next is cash account debit to capital account. So we will come to the debit side of cash account. On the debit side of cash account, what is given opposite? We will write to capital account. And we will come on the credit side of capital account and we will write the thing opposite by cash account. You can see in the cash account, okay, and in the capital account. Then again next entry is Awadh account debit to sales account. So we will come on debit side of Awadh account, we will write in particulars to cash and we will write the amount of Awadh. Again we will come on credit side of Awadh account and we will write by Awadh account. Our credit side of cash account we will write by Awadh account. Then Sunny account debit to sales account. So we will come to debit side of Sunny's account, we will write what is given opposite to sales. So we will write to sales account. And we will come on credit side of sales account and we will write by Sunny's account. Next is bank account debit to cash account. So we will write debit side of bank account to cash and we will write credit side of cash by bank account. Furniture account debit to Maruti Furniture Mart account. So on debit side of furniture account we will write to Maruti Furniture Mart account, and on credit side of Maruti Furniture Mart we will write by furniture account. Drawings account debit to cash account. So on debit side of drawings account we will write to cash, and on credit side of cash we will write by drawings. Now you can see all things I have explained. Now the second is posting a combined journal entry. What is the procedure of posting this combined journal entry? We can see on page number 208 an example is given on 10/8/2015. Goods of 18,000 are purchased from Vishal and we are paying 6,000 in cash. Goods are purchased, goods are coming in, purchase will be debited. Cash is going out for 6,000, remaining cash is not paid, so name of Vishal is to be written. So now whole entry will be purchase account debit 18,000. To cash account 6,000, to Vishal account 12,000. You can see the entry here. Now which are the accounts to be prepared? Purchase, cash and Vishal. Now how to post, my friends? Please listen here carefully. Purchase is debited, so we will come on debit side of purchase account. Now we will see what is written in credit side, means opposite means credit side. In the journal entry it is written to Vishal and to cash, so on debit side of purchase account we will write to Vishal and to cash, and the amount 12 and 6. See, purchase is debited with 18,000 and we have written on debit side only 12 plus 6, 18, so that is also allowed. Again we will come on credit side of Vishal. On credit side of Vishal, what is given opposite, not down, what is given opposite by purchase, so we will write by purchase, but the amount will be of only Vishal, by Vishal 12,000. Again we will come on credit side of cash. On credit side of cash we will write what is opposite, purchase, so we will write by purchase. Okay friends? Okay. Again one more entry is to post here on page number 210. Today we cannot do the sum because if I am starting the sum then it will take so much time, so simply I am explaining. On 12/8/2015, goods sold to Dhyani 24,000, against she has paid 8,000. We are selling the goods, goods are going out, sales will be credited. Dhyani is paying us the cash, cash will be debited, and remaining amount she is not paying, so her name will be written. So entry would be Dhyani account debit 16,000, cash account debit 8,000 and sales account credit 24,000. Now which are the accounts to be prepared? Dhyani, cash and sales. Now Dhyani is debited. On debit side of Dhyani account, we will write what is opposite to sales, but the amount should be of Dhyani only 16,000. Again remember, Dhyani is debit, so we will come on Dhyani's account debit side, we will write what is opposite to sales, so we will write to sales, but the amount should be of Dhyani 16,000. Then cash is debited, so we will come on debit side of cash account, and what is given opposite to sales, then again we will write to sales, and the amount is of cash 8,000. Again sales is credited, so we will come on credit side of sales account and we will write what is opposite. Dhyani and cash both are given, so by Dhyani, by cash 16 and 8, 16 and 8, so total will be 24,000. Now this is very important on page number 211. This is the last thing which we are seeing. Again we will continue tomorrow. Okay, now on page number 21 the entry is very important because so much things are on debit and so much things are on credit. A business is started by Hetansh on 1/4/16 with a cash of 50,000, goods of 55, furniture 12,000, payables 8,000 and a loan from Jignesh 30,000. Now in this transaction, cash account will be debited by not 50,000, but we are taking the loan, then also cash is coming in, so 50 plus 30, 80,000. This is an important journal entry also. Here in this transaction, we are starting the business by cash and also with the loan, so with the loan also cash will come in, so cash account debit 80,000, goods account debit 55,000, then furniture account debit 12,000. Then payables means their creditors account will be credited, not debited. Then loan account will be credited and remaining 80 plus 55 plus 12 minus 8 minus 30, it will be 1,09,000. This will be written in capital. Now which are the accounts to be prepared? Cash account, goods account, furniture account, creditors account, Jignesh loan account and capital account. Now how to post? We will come on debit side of cash account. On the debit side of cash account, we will write what is given in opposite to Jignesh loan and to capital. We cannot write creditors because creditors are not in cash. So we will come to debit side of cash account. We will write to Jignesh loan and to capital because we have brought the cash in two ways. Then we will come on debit side of stock. On debit side of stock, we will write to capital because all things are related to capital only. Such a type of difficult journal entry will not be in exam. This is for just understanding. But we will write the amount of goods only. Then we will come to debit side of furniture. On debit side of furniture, we will write again to capital only. To capital 12,000. Again we will come to credit side of creditors. Credit side of creditors we will write by capital account only. But why capital? All these things are related to capital only. So this type of transaction is not expected in exam. This is very difficult. Then we will come on credit side of Jignesh loan and we will write by cash account because loan is coming by cash. Then we will come on credit side of capital account and we will write what is debited and we will the what is credited we will write on debit side. So this is little bit difficult journal entry, I know, but such a type of entry is not expected. Such a long entry is not expected. Only short entries are expected. So friends, today we have taken a total introduction to this chapter. Tomorrow onwards we are going to start this chapter, and the sums which are to be ignored also I will tell you tomorrow. So that's all for today. Thank you so much.